J-Rod here for Rich Retirement TV, and today I want to tell you why I'm not worried about the recent stock market sell-off, and I want to show you two of my favorite tech pullback plays for you to pounce on today. So first off, why I'm not worried about this recent sell-off. You take a look at the headlines, and they can be scary. We've got big Wall Street mavens out there saying that stocks are wildly overvalued, that another wave of coronavirus is coming, and that you should pull your money out of the markets, hide out in cash for all the dust to settle. And I couldn't disagree any more than I do now with that assessment. I mean, you take a look. Yes, stocks have rallied pretty hard over the last couple of months. Fueled in a big way by stimulus. And we've talked about that here at Rich Retirement TV, that a wave of unprecedented stimulus has been poured into the economy. And investors are getting ahead of the trend in the market. Instead of waiting for the profits to develop, which we know is going to be the case for corporate America, it's take advantage, get into these stocks now, especially with interest rates really very, very low. You don't have really much of an alternative, especially if you're in retirement or you're heading towards retirement. The stock market still remains the best place to generate real returns on your money in the here and now. But instead of me doing the talking, let me show you and not tell you why I am not worried. All right, so you're looking at the S&P 500 right now. Over the last couple of days, you see a sharp kind of pullback here, even breaching the previous high back in February before the corona crash. But, still holding above the 50-day moving average. We still have yet to see a real test of the 50-day in the S&P. But if we take a look at the NASDAQ, which is the spot of the market we're going to talk about a little bit later with these plays, but you see even after the sell-off, we held yesterday at the close above that 50-day moving average. So, for some it might be shocking to see the NASDAQ drop 10% in 3 days, but after a really strong push higher, as you can see here, really over the much of August, just pulling back. And the reasons why, the president has sent some more tweets out. Some of us have forgotten, but tweets move the market. Some of the rhetoric around trade and around just typical election stuff. We are at the beginning of September. We're just moving the markets, but really, what we're looking at is a profit-taking pullback. We're seeing, let's put it this way. You're seeing investors, big money investors, pulling off some of their big profits ahead of what could be a little bit of a more turbulent couple of months with the election in play. But, this isn't new news. The market is usually, erratic, probably a strong word, but you see more volatile action in the months leading up to the election. But there's still very, very good opportunities in the market, even with stocks having rallied so hard. Here, I've been a big proponent of tech stocks. This is the trend. What COVID has done is just move things forward. Say the work from home movement that was already underway. Some of the remote learning that we're seeing. Kids are going back to school now. Both school kids and college kids. This was already underway, and a lot of the companies that are doing very well in tech, they're not necessarily overvalued because a lot of them are generating profits, very big profits. Take a look at the big 5 tech companies. They're generating billions upon billions in profit, as opposed to, let's say, 2000 with dot-com bust, which is or the dot-com boom, which has seen a lot of press recently, a lot of those companies that were soaring were not generating earnings, but we're seeing sustained earnings growth on a massive scale with these big companies and smaller tech companies. I say smaller, but still, large cap and mid cap tech companies are doing very well. So overvalued in some respects, maybe, but look at how companies look today versus how they looked in 2000. If that image is in your head of a huge crash, these companies are doing very well, and we've stuck to good-looking companies here at Rich Retirement TV. So, not to worry there. The other reason here, reason number two, rather. I'm not so worried. VIX is not wildly elevated. You've seen, in February, we topped 80. And the VIX, if you're unfamiliar, is merely a gauge of volatility on the S&P 500. And typically, when we see a lot of fear selling in the market, or a greater downturn, you'll see the VIX elevate as investors put on protection with the S&P. But you can think of the VIX as just a fear gauge, right? As it rises, fear is rising in the market. As it goes down, you're seeing fear go down. And looking at what we saw in February, we're not anywhere near that. Even in June, where we saw the first kind of real wave of reopenings, barely topped 40, which was half of where we were at in February, and now, we're seeing the VIX is elevated, barely broke 35, and the VIX is down from its peak just like 4 days ago. So we're not seeing a sustained push higher in the VIX alongside a ripping downturn in stocks. We're seeing a slightly elevated VIX after a very long period of decreased volatility. Still not a huge move, and we're seeing the VIX decline over the last couple of days. So fear is not wildly elevated here. And the other reason I'm really not terribly concerned here and believe this is what we're looking at as a profit-taking pullback is we're not seeing risk assets rally alongside the decline in stocks in a big way. So let's take a look at gold, right? Gold is not soaring. This is the safe haven precious metal that many people run to when they're selling off stocks. We saw this in February. We saw this again in June. We're not seeing a massive rally here. You take a look at TLT. That's the ETF that tracks long-term bonds. We're not seeing bonds rally very hard either. This, couple of percent of move here is nothing to get terribly concerned about. Take a look at XLU. That is the ETF that tracks utility stocks. If you think about technology stocks as the big boom, say the most aggressive area of the market, utilities represent the most defensive, the least volatile sector of the market. And take a look, not rallying here. In fact, selling off a little bit in concert with the rest of the market. So not huge. And the last kind of indicator that I'll show you here is the dollar. The dollar, we've seen rise of the last couple of days, which has probably put a little bit of pressure on gold. Not a huge rally, and it's really we're seeing a relief rally off of a steep, very very steep decline in the dollar. So, but this is nothing huge. We take a look at February and March, where we were seeing the market crash. That was a sustained rally there, a real risk off movement there. But what we're seeing here is really just profit taking, moving, and really cashing in ahead of the election. So not a ton there to be concerned about. And if anything, if we're looking at this sell-off, this is the golden buying opportunity that many people have been looking for, including me. With that in mind, let's go ahead and take a look at the 2 tech pullback plays that are here for you to pounce on right now. First play, TXN. That is Texas Instruments. They're a bellwether chip maker stock. I mean, I personally, having been a student and had a TI-83 calculator, I'll never forget. This is the first week of school. Going in and going nuts with the calculator. So fond memories of Texas Instruments in general, but they're a big chip maker. They've got their products in a range. Their chips in a range of different products. From heavy industrial to automotive. A lot of processors in cars now are powered by Texas Instruments equipment, and they have pulled back along with the rest of the market, but they had a stellar quarter. They reported earnings back in July, crushed estimates for earnings and sales. A lot of great stuff to love here. They're actually a very quiet work from home stock. A lot of the products that people are using at home, their TXN has their hands in that. But you take a look here. Really, we've pulled back here to just above the 50-day moving average. That's the red line you see here. And we're pulling back here to the top of a range. If you can see, let me make myself just a little bit smaller here. You take a look at this stock. You see this range here, these two yellow lines. The TXN, the stock, kind of oscillates between these two levels, right? We got the 135 at the top and we got 120 here at the bottom. It's a $15 range. And back in July, ahead of earnings, told you expected a big move in this stock after earnings. And sure enough, we got a big breakout here of that 135 level. And as we pull back here, I think you have another really, really good buying opportunity here. You've got the 50-day moving average as support. We did break a little bit below the July high here, but you've still got 135 as support. You've got the 50-day moving average here as support, and this range here, $15. If you put that on top of the 135 range, or say on top of 135, that gives you a price target on the upside of 150. That's 14% or so from where the stock closed yesterday. That's not bad at all. Especially, you take a look at if you are in retirement, this is a fantastic income stock. Along with the stock action we're seeing here, pays a 2.7% dividend. Compare that to a 1.7% percent yield on the S&P, and a not even 1%, 0.88% yield for tech stocks. This is one of the few names in big tech that actually pays a dividend, and a strong dividend at that. So you've got a great buying opportunity here in the long, take advantage now of this dip for the long term. It's a great play here. And the second play on my list here is Corning. And I'm a big fan of Corning. They're a major 5G player. Corning makes glass, specifically for tech. They make they make glass for fiber optic wire, and they also are a major supplier of smartphones to Apple, or supplier of glass to smartphone manufacturers like Apple and Samsung. They're Gorilla Glass. Do I have my phone handy? Here we go. You'll find it on your iPhone. And as you probably heard, Apple has announced their big keynote event, or one of their keynote events, in next week on September 15th, and that's where we'll probably get a good look at what the iPhone 12 is going to look like. And Corning, big supplier to Apple, is going to have a huge role in that production buildup for the fall sales of the iPhone 12. But yeah, you take a look. Another stock here that's pulling back. We haven't even made it back to the 50-day moving average, but we're still holding here above. You take a look, the October 2019 highs and the January 2020 high. I mean, you're holding above these highs. You've got the 50-day moving average here as support. We haven't seen a real test yet, but this is a stock, a momentum name that is still holding above its 50-day moving average. And when I say momentum name, this is a stock that over the last 2 months, let me show you the chart here. Over the last 2 months, or since July 1, the stock has really has rallied 24% compared to a 9 or a 10% here move in the S&P, more than double the S&P here. So sustained push here for the stock, and you're getting just a little bit of pullback while the rest of the market is pulling back even harder. So this is a really good opportunity to take advantage of this name. And the name is up pretty hard after earnings. Also, like TXN put in a very good performance, beating estimates. So a lot to like here, heading into the end of the year. 2 really good momentum stocks here in Texas Instruments. Again, that's ticker TXN, and Corning, ticker GLW. So yeah, to sum up again, do not be wildly concerned with this sell-off. If anything, especially if you're a long-term investor, take advantage of this dip now while you've got it and prepare your portfolio for the long term. Get those returns for your money now. And really take advantage of these big tech plays while they're still cheap. They're not wildly find the names like Texas Instruments, Corning, that are not wildly overvalued and are generating real profits, and they're also paying you a dividend too. Those are the names that you really want to stick with. Stick with the winners. Use these dips to put more into your winners. But there we go. Thanks so much for watching today's video. Again, I'm J Rod for Rich Retirement TV, and I'll see you next week.